Hey everybody, it's Asif at ThinkAsif.ca. Today we have Patrick Ruiz from Capital McDonald, an accounting firm, and we're going to ask some questions about a variety of topics today. So thank you for joining us today.
Yeah, thanks Asif for having me.
So first of all, what do accountants do? Tell me about accountants. What do you guys do? Other than taxes.
Other than taxes. Well, high level, what we try to do is help people make informed financial decisions, whether that's impacting their business or themselves personally. Because quite frankly, most transactions may have a tax implication or impact, as well as how to, analyze or perform better. Think of us as like financial doctors. So we can, grasp people and businesses' financial performance pretty quickly and then make some recommendations.
So outside of just taxes, you guys do payroll?
Right.
And what other things do you guys do?
Yeah, so in addition to taxes, we can support a small business owner or self-employed's payroll, their HST, so that's a value-added tax.
Okay.
We'll do bookkeeping, so we can produce books and records for a person's company. In addition, we also do something that's called assurance. So we'll issue notice to reader statements, review or audit statements. And usually when we attach those letters to a person's set of financial records, they're taking it to a third party. So in 99% of our instances is either an investor, an outside investor, or a bank.
Okay. So we're in the middle of tax season right now.
Yes.
Tell me, what are the deadlines for getting taxes done?
Okay. So we're approaching the April 30th deadline, and that's for individuals. If you are an individual and are self-employed, you actually can file by June 15th. So the government gives you a little bit of extra time to get your records in order, just because it takes a bit longer to produce your expenses or, how much revenue you collected. However, if you're self-employed, you do have to pay by April 30th.
Gotcha.
Any taxes only. And
corporate taxes are based on your financial year for your corporation.
Yes. So most people actually like to keep a December year end. I think we're just geared to that. But technically, you can cut your year end at any time of the year. Okay. So taxes are due 90 days after that your corporate year end. Okay. And then you have to file by 6 months if you have that corporate year end.
Gotcha. So for your personal taxes, whether you're self-employed or you're salaried, what type of things you need to gather to prepare for that?
Right. So if you're, say, scrambling and trying to get to an accountant by the April 30th deadline, right now, actually, the CRA has a lot of the informational slips uploaded onto their system. So either from your employer, or if you invest in RRSP, a bank or brokerage that takes your RRSP, as well as your investment income. So what we would need is just to get access via the CRA, so your full name, SIN number, and date of birth, and then we can download most of that. What the CRA probably doesn't have are any medical or donations, and some other types of information that are particular to a person. So say the property taxes. So that's it. That's about most of the stuff that an accountant would need to complete your returns.
So a lot of the stuff they already have, it's already been sent to the CRA.
Oh yeah, 100%.
Okay.
Yeah, so it's full. So the CRA is actually pretty forward in there. Everything's electronic and documented right now. Okay. So
good to know. What happens if somebody doesn't pay on time or doesn't get their taxes filed on time?
Right. So usually that's a late filing penalty if they owe taxes.
Okay.
If they don't, however, and they say, the next year, then the CRA can charge a super penalty. So I guess with all this data and computers, they're able to, discharge and charge these penalties. So we really encourage to file on time.
Okay. So if I walk through a mall, I'll see kiosks set up and it's Softron or H&R Block. What's the difference between going to one of those type of accounting firms to do my taxes versus going to an actual accountant?
Right. So I would say the biggest difference is if you're going to an accountant, it's a high touch point type of service because you're building a relationship over time. So an accountant is going to get to know your personal situation and particulars and be able to offer value-added planning and as well as any other value-added stuff to you. It's kind of like going to a fast food restaurant. If you get good quality, but it'll be very quick, and it's more transpositional at a Softron or an HRL block. Okay. So, they do good service, and it's just the type of person. If you have a very simple and basic return, I would say you could be well served there. But if you have other things that you want more attention to, you'd probably be better served going to an accountant.
You kind of get what you pay for.
I would say so.
Okay.
Whether it's time invested or, in terms of price, you definitely do get what you pay for. And one of the things I caution people is, because we get people who've gone to, say, high volume outfits, is from an accounting tax, it's one of those things that you don't know. You actually really don't know what you aren't getting. And that times can often be scary. So if you want to be proactive, you'd be best served going to an accountant, because you don't want to be going to an accountant when, say, mistakes have happened, or you've late filed, or you didn't get the attention because issues came up and you went to a more volume-oriented shop where they didn't have the time to service you.
Okay. Well, that's all for today, but I want to thank you for joining us. And if anybody wants to ask any questions or reach out to Patrick, his information is going to be at the end of the video. So please feel free to reach out to him or contact me, and I'll get you in touch with him. And thanks again for joining us.
Thanks, Asif.